Hello, my dear Forex students. Eric Query here. Welcome to Lecture 5 of the LifeVersity Forex Trading course. I'm very excited to have you in this lecture. If you have been with me all the way from the introductory video to Lecture 5, you have covered 6 lectures. Those are 6 videos. Me guiding you along your foreign currency trading journey. That is incredible. We have 15 more lectures to go, and the more we proceed into the course, the more exciting it becomes, because most of the things that I'm telling you are becoming familiar and you are coming to understand the secret of the market. So I'll only urge you to stick around and watch out each and every day for a new lecture. If you have not watched the introductory video and lecture 1 to lecture 4, kindly check out the links in the description and ensure you watch all those 5 videos before you proceed with this. So if you have missed any of the lectures that I have highlighted, the introductory video and lecture 1 up to lecture 4, kindly ensure you check them out and update yourself to clear the backlog before you proceed with this lecture. In this lecture, I'm going to introduce you to forex analysis, and we are going to look at two most important types of analysis that we do as forex traders. That is, one, fundamental analysis, and two, technical analysis. Let us just head over to our LifeVersity forex trading timetable in order for us to update ourselves on what we are going to tackle in this lecture. And according to our LifeVersity Forex trading timetable, as you can see in lecture 5, we are covering two parts. Part 1, we have introduction to Forex analysis, and part 2, we have types of Forex analysis. Without taking much of your time, let's just head over to the lecture. And as you can see in part 1, introduction to Forex analysis, Forex is not gambling. Many people confuse foreign currency trading with gambling. Most novice traders do gambling in the foreign currency market, but as a technical trader, you'll come to understand that foreign currency trading is not gambling. A professional forex trader uses different analytical tools to steer clear of gambling and to effectively determine the direction of the market in order to make profit. The aim of any forex trader is to win as many trades as possible and also to maximize those winning trades. So you will not avoid losses. I've been there and I can be able to prove it to you. You will always make losses in the foreign currency trading market, but the aim is to maximize your winnings and to ensure you win big and you lose small. As a forex trader, you will need to use forex charts and news and to accurately analyze and trade the markets. This section will introduce to the different types of forex analysis to help you improve from being a gambler to a professional trader. So in this lecture, I'm going to help you be able to graduate from being a gambler to a professional forex trader, because I know what most people are doing. They base their trades on gambling. They enter the market and cast lots like, am I going to buy? Some count 1, 2, 3 over the sell and buy button. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Whichever takes the last digit or the 10th digit, it means open or sell or buy. So that is typically gambling, and that one won't get you anywhere. That's why most people are usually disappointed when they lose on trades. Other people rely on other people to give them signals. You can't make it if you rely on somebody else to feed you. You must know how to fish. Foreign currency trading is like fishing. If you are relying for somebody to feed you with signals, it's very hard for you to learn. You must be able to do your own analysis. You must be able to read widely, read the news, and update yourself on what is going on in order to determine where the market is headed, and in order to make correct decisions when you are entering the market or when you are opening a position. In part 2, that is types of forex analysis. Just to refresh your memory, there are two main types of forex analysis. These are, one, fundamental analysis, and then we have technical analysis. Very important. There are only two types of forex analysis, and these are fundamental analysis, that is the use of news to speculate the market. Very important. News determine the direction of the foreign currency market, political news, economic news, and much more. Secondly, technical analysis. In technical analysis, you use technical analysis tools, and as I have highlighted to you in the previous lectures, There are three most important tools that I use as a technical trader, and that is the moving averages, the trend lines and remembered lines, and lastly the Fibonacci retracements. I use news as a secondary trading tool and price action also as a secondary trading tool. And for price action, the most important tool that I use, we covered in lecture 4 yesterday, and that is the Japanese candlestick pattern. So we'll just head over to my foreign currency trading chart over here, and you'll be able to see the chart. This chart is the Euro USD, the 1 hour time frame. As you can see in the market seems to be trending upwards for a while. It's above this green line, that is the 50-hour moving average, and the light blue line, the 200-hour moving average, meaning the bulls are in control, and bulls have been in control for a while. A moving average is a most important technical analysis tool that I use. And apart from the moving average, as I told you earlier, I also use the Fibonacci retracements, and I showed you how to sketch one. You just come here on your menu bar, as you can see an F here. You tap on that F and you connect lower points to higher points. In case of an uptrending market, the highest price to the lowest price during that session, in the case of a downtrending market. So as you can see in the chart here, we have a scenario of an uptrending market. So I'll simply connect my lowest price in this session to the highest price in this session, and as you can see here, this is the lowest, this point here, and then this is my highest point in this trading session. So I'll just tap on the lowest point and connect it to the highest point, and from that I will be able to derive my Fibonacci trading levels. There are different types of Fibonacci trading levels: 100%, 61.8, 50, 38.2, 23.6, and 0.0. This is an uptrending market, and as you can see, as the price hit the 50-hour moving average, it's around 61.8, and broke that Fibonacci level. The price has kept going high until it hit a zero level, that is 0%, and then it has been dropping. The speculation here is that the price will keep dropping. Let me sketch a horizontal line here at level 23.6. The speculation is that the price will keep dropping until it hits 23.6 level, and then it can either break the level and keep dropping, or it can be able, the level 23.6% can act as a point of support, and the price will retrace back to a zero level. But in most cases, as you can see, the price rose from 60, that is from Fibonacci level 61.8 up to 0. The probability is high that on hitting 23.6, it may retrace, or it will head over to 38.2 before retracing. We shall be able to cover the Fibonacci retracements in the upcoming lectures in detail. I will show you how to sketch them on this chart and how to use them as a technical trading tool. The second technical trading tool I use is the moving average, and heading over here to insert, we use the insert button on the menu bar. Under insert, we go to indicators, and then we go to trend indicators. Under trend indicators, we shall find our moving average. So for moving average, we can set them. You can see the pop-up screen there. We can set them from 10-hour moving averages to 100-hour moving averages, 200-hour moving averages. My maximum moving average is the 100-hour moving average. We have the simple moving average, the exponential moving average, the smoothed, and the linear weighted. But the ones that I use on most cases are the simple moving average and the exponential moving average. So I usually like sketching using the simple moving average, and I can plug in any number, any period. For example, I usually use 10-hour moving average, 20-hour moving average, the 100-hour, and the 200-hour moving average. So we can go ahead and sketch the 10-hour moving average, the 20-hour moving average, and the 100-hour moving average. over to insert, we go to indicators, trend indicators, and then moving averages down here. There we go. And then we can sketch the 100-hour moving average. As you can see, you can choose the color. I can customize mine to any color I want, like to yellow, gold, and then that is the simple moving average. And then I can choose the density of the line. It can either be dense or less dense. I like playing in the middle ground. Then there I plot it. Now the yellow line is my 100-hour moving average. As you can see, the price kept breaking these moving averages, and the moment it broke the 100-hour moving average, it has remained bullish up to now. And the speculation is that when the price comes back near the moving average line, it's a good opportunity to trade. Right now, as you can see, it's way above the moving average line. You can go short using the Fibonacci levels, but it's not recommended. You need to wait for the price to come low if you are trading using moving averages, so that you can either place your stop loss slightly below the moving average line if you're buying, or slightly above the moving average line if you're selling. That is everything about moving averages. We shall cover them in the upcoming lectures. And then thirdly, another tool I use are trend lines. As you can see over here in the menu bar, these landing lines are the trend lines. If you want to access the trend line, the Fibonacci, and the moving average, all you have to do is to come over here at insert and go to objects. You can insert a trend line, a Fibonacci, and if you want to do the moving average, as I indicated earlier, go to indicators. Under indicators, go to trend indicators, and then you'll find moving average under those. So let's just go to trend line. That is my third technical analysis tools. Coming over here, I can pick up a trend line and connect my lower highs in case of an uptrending market. And as you can see, these are my lower highs. This is an uptrending market, and I can just sketch a trend line over there, connecting all the lower highs up to there. And as you can see, when the price touched the trend line, it could bounce back and then come back and touch the trend line and bounce back. That is what happens. So when the price is touching the trend line, it's a good opportunity to trade, because you can be able to place your stop loss near the trend line, either above the trend line or below the trend line. If the price gets below the trend line, it is an opportunity to sell, and if the price gets above the trend line, it's an opportunity to buy. As you can see, when the price touched this trend line over here, let's just extend it over here, it was an opportunity to buy. And if you bought on the over here, then you made profit all the way until the price touched the trend line again and then bounced back. It literally broke the trend line somehow and then bounced back and kept going higher and higher. That is it about trend lines. My next forex analysis tool are news. And news, I simply get them online. Head over to the internet. I use different types of news like Forex Factory and much more. I'll be able to disclose to you most of these websites that I use for news, in order for you to have a clear understanding of everything there is. For instance, we are on the homepage of Forex Factory, so I just head over to news, and from there I can be able to read any types of news of the day. As you can see, the currency pairs, the trading, the everything. You can access the news. What is happening in the US will mostly affect the US dollar and much more. The news headlines and much more. I simply go online. As long as you have a stable internet connection, you can go through these news. I read the news very early in the morning in order to speculate and know the direction the market will head. After going through the news at around 5 a.m., I'm able now to have an overview of what to expect in the market. After that, I head over to my technical analysis tools. that is my charts, and I'm able to sketch the Fibonacci, the trend lines, and the moving averages, and be able to speculate where the market is going to move. If there are news to be released, most important fundamental news, I'm able also to wait and see if I can get good opportunities to trade. I'll be able to disclose to you each and every tool I use for both my fundamental and technical analysis in the upcoming lectures. So this is just an example of Forex Factory, a website I use for news. There are many other fantastic websites I'll be able to disclose to you in an upcoming lecture. That's it for this video, guys. See you again in the next lecture, where we shall be sharing another amazing topic. In this lecture, we simply looked at the introduction to Forex analysis, where I introduce you briefly to fundamental analysis and technical analysis. And basically, fundamental analysis is the use of news, and technical analysis is the use of technical trading tools. I will be able to disclose to you most of these technical trading tools, and again, I'll disclose to you most of these fundamental analysis websites that you can leverage in order to study the market and to analyze the market accurately. In lecture 6, we shall look at fundamental analysis and the major fundamental news to look out for. And most importantly, I will disclose to you all the websites that I use to analyze the market for my fundamental analysis part. Until next time, guys, see you again. Ensure you check out lecture 1 up to lecture 4, and most importantly, the introductory video before you proceed any further. May God bless you. See you again in lecture 6 tomorrow. Ensure you check your emails in order to check out lecture 6. May God bless you.